Well, now this morning, new reports saying Alphabet is entering a deal to acquire that firm for $23 billion. And that's the topic of this morning's Tech Check with Deirdre Bosa, which, interestingly, Deirdre, despite that big price tag, Alphabet shares are higher this morning. Investors seem to like it.
Because it needs a boost in the cloud, and Wiz would do just that. And it's really hard to overstate just what a darling Wiz is in the venture community. You've got Index, Sequoia Capital, Andreessen, just some of its early backers that would get a big exit here if it does move forward. It was also number 9 on our CNBC Disruptors list this year. When I spoke to Rappaport just a few months ago, he had just raised another $1 billion, valuing his company at $12 billion at the time. He wasn't in any rush to sell or go public, but a Google deal for $23 billion would represent nearly double that last valuation, a huge jump up. In one chart, here is why. Wiz is a cloud-native cybersecurity company, and in just 4 years, it was only founded in 2020, it has very, very quickly been able to compete with the giants in the space, Palo Alto and CrowdStrike. It is now the 3rd largest cloud security vendor by ARR, that's annual recurring revenue, and it's growing more than 3 times faster than the leader, Palo Alto. Now, Google bringing it in-house would be a huge boost to its own cloud offerings, where it still trails Amazon and Microsoft in terms of market share for infrastructure. But Wiz's leadership in cloud security, that's also why Google may be tempting regulators if it does move forward with a bid, as the Journal reports. Even though Google is a distant third in cloud computing, acquiring Wiz would be taking out a major competitor in this category, cloud security. It would also be Alphabet's largest acquisition ever by a long shot, at a time when its core business is already in the crosshairs of the Department of Justice. But with a more than $100 billion cash pile, Google may be willing to try. Remember, too, that these deals take time. If we get another Trump administration, I know you guys have been talking about it this morning, Google and the other mega caps, they may be anticipating a friendlier regulatory environment for M&A, making them more likely to try these things. Remember last week we were talking about HubSpot, that deal being off the table. It's clear that Alphabet wants to do something to boost its cloud offerings.
Is that why CrowdStrike, Palo Alto, some of the other cyber names are up right now? I mean, we're getting a pretty broad tech rally in general, but Palo Alto is a more than $100 billion company. Is it seen as a target?
So there's 2 schools of thought here. If Wiz goes in-house to Google, maybe Palo Alto and CrowdStrike would say that being independent is a competitive advantage for them. You wouldn't have to go in-house to Google. And remember that a lot of Google Cloud customers and Amazon and Microsoft Cloud customers also compete with them in some different ways. But on the other hand as well, it could weaken Palo Alto and CrowdStrike, right? Because then you've got Google, its heft, its capital behind such a darling like Wiz that is already sort of winning customers from those 2 dominant players. You may want to look at some of the smaller mid-cap names, though. They're also higher today. Sarah, you're right on that broad tech rally. But names like Sentinel-One and Okta, those could potentially be acquisition targets if you think that now Amazon and Microsoft has to boost their cloud security offerings, too.